What's up, YouTube? I'm Ace Palomero, South Texas Realtor, proud son of the Rio Grande Valley, and tax-paying landowner. Today's video is about seller financing. This is largely because I just got a new listing last week. A lot of the inquiries by potential buyers are about seller financing. So in light of that, let's get this video rolling. What is seller financing? It's exactly what it sounds like. Basically, the seller of a property, instead of a bank or a lender like in traditional financing, acts as the bank for the buyer. So the purchase price of that property is either partially or completely financed by the seller of the property. And now with the rates being significantly higher than they were like back in 2021, a lot of sellers are more open to seller financing. As a buyer, you might be considering seller financing because for whatever reason, the traditional financing for a property just isn't as appealing financially. You also might be in a position where it's difficult for you to either have that down payment down to get your rate to an acceptable number, or that for most people the rates are just too high. The October 2023 SLUIS report just came out, so that's a senior loan officer opinion survey on bank lending practices. And I'm not going to read the whole thing, but basically lending standards have tightened all across the board. It's more difficult to get all kinds of loans, and these are auto loans, like credit lines, commercial loans, industrial loans, commercial real estate loans, residential loans. I think the only thing that wasn't really changed, at least standards for it wasn't really changed, was for government residential mortgages. Regarding the current mortgage rates, believe it's, so according to CNN, I know, the average mortgage rate for a 30-year fixed mortgage for the week ending November 9 is 7.5%. It's down from the 7.76 the previous week. So that's according to this anyway. It's probably due to the treasury yields coming down. Now, if you're the seller of a property, like, seller financing is probably not very attractive to you. It definitely was not attractive back in like 2021, early 2022, when the rates were still lower. But think about it like this. Let's say a buyer's only offering 10%, 5%, 3.5% down. For whatever term you agree on, whether it's like 2 years, 5 years, 10 years, you're not getting your payoff immediately. Obviously, you're going to be asking an interest rate, right? So you get something for waiting for that payoff, but it's still a risk, right? What if you have to foreclose on the property? Fortunately, Texas is a non-judicial foreclosure state, but it's still a process. And if you have to foreclose on the buyer, let's say they're not able to meet the terms, you're gonna have to put the property back on the market. But with rates having been mortgage rates having been elevated for over a year now, as a seller, you may have to start considering that accepting a seller financed offer from a buyer might be the way to go. Going back to that SLUIS report, with lending just being tighter, lending standards being tighter, and loans being harder to come by for the consumers. Well, we see that here too in the Rio Grande Valley. Like I mentioned earlier, I just got a new listing last week. It's a 10 acres corner lot. We're asking $250 for it. Majority of the inquiries have been, is a seller open to seller financing? Some of the potential buyers saying that the lenders, I don't know if it's like national lenders or just lenders down here, maybe both, uh, they're not really lending for land mortgages or for construction loans. Now, I don't know if they were just trying to get me to, talk to the seller and convince it to lower the price or anything like that. But I think it just goes to show you that there aren't as many buyers out there, for 2023 compared to even 2022 and especially 2021. Now, if you're a buyer looking to do seller financing for a property that you're interested in, you should probably try to put yourself in the seller's shoes a little bit. You're asking the seller to take on risk by essentially extending their payday for that property. Let's run some numbers. Okay, so for this example, and I'm using Omni Calculator, and I'll link that in the description below. But let's say you're only able to put 10% down, right? That's 25,000. So the loan amount for this seller financing option is 225,000. Let's say the seller agrees to do a 30-year term, which I don't know any seller would do, right? And so your amortization schedule is over 30 years. Amortization, basically an account technique, regular payments, both principal and interest, to lower essentially what you owe on that loan, right? We'll put the interest rate at 10% because I don't know how many sellers will actually give you a rate that's lower than what the bank would, assuming all the other terms are equal. So your monthly payment is just under $2,000, so $1,974.54 according to this website. But once again, let's be real, I don't know how many sellers are willing to do owner financing over 30 years, right? They want their money. Most sellers will want their money, or as much of their money, like up front. So basically, bigger down payments. But for the sake of argument, let's do, keep the down payment the same and do the amortization at 10 years. That changes your monthly payment to $2,973.39. Assuming the seller agrees to this, or the hypothetical seller agrees to this, you're still going to have a total interest payment of $131,806.99. Now, let's say you're going to, I guess, make significantly more money a few years from the time of the purchase. What you could do is do a balloon payment, right? With a balloon payment, the mortgage is partially amortized, and you have like one big final payment at the end. So let's keep everything the same, right? I'm still using Omni Calculator, but I guess a different part of it. So 25,000 down, 225,000 is being financed. The amortization period, so what we're basing the rate off of it, at least the term of it, is 10 years. Interest rate we're going to keep at 10%, and the balloon payment, basically the whole actual term, is going to be 2 years. So even though the payments are based off of 10 years, for the amortization schedule, you actually finish paying in 2 years. And your monthly payment's going to be the same, $2,973.39 for 2 years every month, and you'll have one final payment of $195,950.93. Your total interest payment is only going to be $42,312.33. Like, you're saving almost $100,000 in interest if you do balloon payment. Now, let's say you're able to put half down, right? 50% down. So you're only financing $125,000. Keeping everything the same, the amortization schedule at 10 years, 2-year balloon, and interest at 10 years, your monthly is now $1,651.88 for 2 years. And your last payment, the balloon payment, is going to be $108,861.63. Your total interest payment will be, over that time period, $23,506.85. So if you're a buyer looking to do seller financing for like whatever property, I'm hoping that the examples we just ran through make it evident that basically the bigger down payment that you do, the shorter the term, and the higher the interest rate that you can tolerate, the more likely it is a seller will be willing to accept a seller financing offer. Also, if you're a buyer, just generally, like, the bigger down payment that you can do, like the more you save on interest. Same thing, like if you can pay it off earlier, assuming that there's no prepayment penalty in the contract with seller financing, and actually even traditional financing, it's generally a better idea to pay it off earlier. Like, you save a lot of interest. And whether you're a buyer seller, whether you're doing traditional financing or seller financing or some other creative financing, I always recommend to everybody to get a lawyer, get your own lawyer. And that goes double if you're doing seller financing, because there is a Texas Real Estate Commission promulgated addendum for seller financing. But a lot of the times, at least from what I've heard from other agents and other sellers who have done seller finance sales in the past, that it's usually a contract drawn up by their lawyer. I just want to show y'all this new application that's available to us who have MLS access for the Greater McAllen Association Realtors. But yeah, let's check it out. So I set it to Hidalgo County and for the past 5 years, but looking at sales price, the median sales price, number of new listings, homes for sale, pending sales, closed sales, days on market, months of supply, percentage of list price for the sale, price per square foot, dollar value, number of median showings to pending, shows per listing. It looks like we're getting really, really close to pre-pandemic levels for everything, but basically price per square foot and sales price. Yeah, people keep asking me, like, do you think there's going to be a crash, a housing market crash, or a real estate crashes in general, or here in the valley? I mean, like a lot of industries, real estate's cyclical, and I don't know if we're gonna see like a 50% crash, which I doubt. But I mean, I could see a correction coming in maybe even late 2024, like next year's election year, or early 2025. I have several relatives who own rental properties here. I was talking to one of my uncles actually a few weeks ago, and he's had his property since before, like, the great financial crisis of 2007, 2008. I think he had his apartment since like the early 2000s. So what he told me is that basically the majority of the small mom and pop investors who also bought the apartments, the fourplexes, like in his area, the majority of them had to, the majority of those who did do like the FHA loans at 3.5% down, like if they didn't put a significant down payment, a lot of them, if they couldn't, I guess, survive, because rents did come down a little bit during that time, even here in the valley, I guess depending on the property itself. So those properties were new back then, right? So you're probably top dollar back then. A lot of them ended up having to sell or having to foreclose their properties. So, like for me, that's kind of like a tale of caution for anybody. Like even if it's it doesn't matter if it's your primary residence or if it's an investment property. You should be like doing your due diligence and trying to put more than that 3.5% down, because like not only are you paying like that much on interest, especially now that the rates are, I think for investment properties it's got to be over 7.5. They're always going to be more, or they're almost always going to be more than like residential mortgage rates. But yeah, you should be trying to put more than the minimum amount, and like trying to do that FHA. Like, well, first of all, you have to live in the house, in the fourplex, if you're buying a fourplex. So you're not going to be you'll be losing money every month, even though if you're paying down your principal. But yeah, it's just a risky position to be in. And I think ARMs, like adjustable rate mortgages, are being a little more prominent now. Like that's risky as well, because yeah, like the rate can change. Yeah, it's I think for most people, like if you're making median income, you have student debt, your credit score is average or below average, you have other things to worry about besides trying to get into the housing market at this time. So yeah, if you're considering seller financing for a property you're interested in, my recommendation, besides getting a lawyer, because there's a good chance that the contract for that sale will be one that's like custom drafted by likely the seller's lawyer or the seller's attorney. I also recommend getting a CPA or financial advisor. I mean, I do have my business degree, but I'm not a financial advisor. I don't give financial advice, and I'm not an accountant or a CPA. I'd be happy to run numbers with you, but it's not going to be at the same level that, a CPA or an accountant or a financial advisor, a licensed financial advisor, will be doing that number crunching at. So yeah, that's it for the video. If you found any of this useful, like and subscribe. Bye.